What's up, guys? In this video I'm going to be talking about the information. This is definitely one of the most crucial parts of my trading strategy, so make sure you guys are taking notes right here, man. This is a very powerful aspect. So first off, there's going to be three different types of informations. You're going to have the fake out M, which is going to be price consistent of higher highs, higher lows, higher highs, and then pushing above a resistance level and then coming back through for the pullback where you will potentially be entering. So that's going to be your first type of M, right? There's going to be benefits, there's going to be positives and negatives to each one of these M's, and I'll kind of walk you guys through that. So when it comes to the fake out M, one of your drawbacks is sometimes price could continue to the upside since it did have enough strength to trade above structure, but usually the fake out M is designed to put buyers into the markets and then fake them out and go back with the sell. So once you enter right here, you'll be catching that move back to the downside. Aside from the fake out M, we have the normal M. So this is going to be the simplest of them all. Basically, you'll see price approaching a form of resistance, making higher highs, higher lows, and then price tops out, breaks a new low, and then we're pulling back and we'd be entering right here for a continuation to the downside. So this is a very simple M. You know, this is very routine. This doesn't involve any manipulation or anything like that. And then we have the last but not least, which is my favorite M to trade. This is the manipulation M. So basically you'll see price making higher highs, higher lows. We make this final high and we push up, and then we make a mastery candle with the information, make a new low, and then we enter right here for a continuation to the downside. So by far this is my favorite. They are all very, very powerful. Let's go ahead and get into it, man. So we're going to start with NZDJPY. This is an example right here of a manipulation M. We see that price is trending to the upside very, very strongly. And we know that, the market is very overextended. And what I mean by that is the market has been pushing up for a very long time. We really haven't seen any structural lows yet. You can see right here we made this low, made another low, made another low. And we know that all throughout these areas, we can go ahead and say there's liquidity on these retests. There's more and more liquidity building up through the market. So eventually, through all this pressure that is being built up, we have to see some type of release, and the market kind of push down right here. Maybe not this far, but at least some type of expansion back to the downside when we see a pattern like this occur. So that is what we're aiming for. Basically, we see that push to the upside. We see our pullback, and then we see another push to the upside. And when that occurs, we're looking for a bullish move to come up, only to see a strong bearish move come back, and that is exactly what happens here. And once that occurs, you will be looking for a pullback. Now, the way you go about your entry, right, is going to be using your Fibonacci, very similar to the mastery candles, except when you are trading a M formation, you are not going to be including wick. So you see how we have a wick right here? You are only going to be including the body of the candlestick down to the previous body of the candle. Okay, the difference between the mastery candles and the M formations is you are going to be entering from the 786 through 618. So this is going to be your entry zone. Okay, I know when we do the mastery candles, we're usually entering on a 0.5 through 618. When you see M's, you're looking for deeper pullbacks. Okay, from back testing, from practicing in the past, I've noticed that price for the most part pulls back through the 618. So that's kind of the way I utilize my strategy, right? So I'm looking for an entry in here, not down here. So that's why the M formations are usually my favorite to trade, because they offer a very good risk to reward ratio. So if you look right here, we push to the downside. From that point, we'll be going short on a 618, and then stop loss will be somewhere around here, right? About a 10 pip stop loss, and then you can aim for the take profit to be at the 618. Like I said, you're gonna have multiple take profit options. You could either go to TP1 or TP2, really depending on how long you want to hold through that. So let's go ahead and get some of this cleared off of the screen real quick, and then I'll show you guys how this trade actually plays out. And I actually took a trade very similar to this the other day, but you can see what are we doing, building up liquidity. So these will also be potential long-term targets on this trade setup. So if we go ahead and press play, we see that price wicks off, comes up a little bit into the negatives, and then it hits our stop loss, right? So the benefit here, right, if you would have had a wider stop, you'd have been fine. If you would have had a wider stop, you would have definitely been fine. So like I said, there's benefits and drawbacks to everything. If you would have went with a tight stop loss, you would have been hit out. If you would have had a stop loss above that area, you would have been good. So as you can see, price is probably going to target this previous level, and we break all the way through and grab the liquidity of these previous pullbacks, and that was a very strong move to the downside. Next is going to be AUD USD M formation. So this is going to be a pretty simple M, right? This is going to be a normal M, back to what I was saying right here, right around resistance. But if we go right here, you can see this is the previous level. Price comes up, tops on it. From that point, you would draw Fibonacci from the high to the low. Remember, we aren't going to use the candlesticks here. And as you can see, when you're looking at the M's and the W's, or I'll get into the W next video, but when you're looking at the M formations, you're looking at a deeper pullback, right? You see right here, on average, price does not pull back here. They always go a little bit deeper. And you could have either entered on a 618, 786, or the middle. Okay, if you don't really know what to choose, you can go with the middle. That's more conservative. The benefits of entering on a 618, you're going to find a lot more trades. The benefits of being on the middle, you'll kind of have the best of both worlds type of thing. And then the benefits of entering on a 618 is you're going to have the best risk to reward ratio, right? You're going to have the best in terms of your entry, but your entries are going to happen less. So it really depends on finding what you like the best. Make sure you back test this. But then we notice, boom, very clean entry. Could drop that right here, sniper, and then we push all the way to the downside on this trade setup. So very, very clean. And then you can see this is normal, you know, right around this previous top. Sometimes you will have something like this occur. You know, you'll have a mastery candle come up, manipulation M, come back, pull back, and then continue back to the downside. So that's what we have going on there. GBP/JPY, here's a trade setup I actually took. This was my world record trading day. Not world record, but personal record trading day for this trade. Basically, this was a somewhat contraction expansion type of thing. We noticed that price made this range, right? It's made this range. We kind of bounced back and forth a little bit, and then we peaked below this area here, and then we also peaked below this area here. So if we were to go ahead and get this, we can draw this was our potential expansion of price. So when price is moving in a downtrend, you'll have contraction expansion, and it'll happen occasionally. Right, so if we're in a downtrend, we see contraction. Sometimes it will do something like this in reverse. Other times it will contract, push up, and then come back down. So it really depends, like I said, on what the market structure is telling you. In this case, you see the M, you see the valid opportunity, you would have took your trade based off of here. So it's not necessarily a matter of you're only buying on the expansion or contraction. You want to throw confluence with the mastery candles and the M formations and any other candlestick formations that I'll walk y'all through throughout the rest of the course, right? So we see right here, M formation tops out. This is a fake out M. Remember, we're pushing above this structure, and then we top out around this area, and then once again, a new low is being made. That is how the M formation goes. Price pushes up, makes a new low, breaks some form of structure, and then we're pulling back. So from this point, what are we doing? Fibonacci from the high to the low, not including the wick. Remember that. And then 618 through 786, short somewhere in this area, stop loss somewhere above this high, take profit around here, and then your long-term take profits, draw these pullbacks out. So you see how we have these pullbacks. These are going to be swing targets, right? Because this is where previous liquidity entered. So we could be targeting that, and then boom, we ended up hitting this all. And this is a 1 to 11 risk to reward ratio. Insanely good entry, and I'm gonna drop this little sniper. Boom, right there. Another clean setup. This is a contraction expansion play with the M formation. Next is another trade on GJ. Some trades I actually personally took here. Right here was another M formation. This was kind of like another fake out trade. We see that right here. We ended up pushing up. Another contraction expansion, right? Somewhere around here we have a bit of contraction. Then we go ahead and map this out. And what do we have near the top? Fake out M. From that point, what are we doing? Finding the high of the M, the close of the candlestick, and then we're coming all the way down to here, mapping this rectangle out, shorting somewhere in here, stop loss somewhere around here, depending on where you feel comfortable, and then targets are going to be around here. Crazy entry, crazy entry. So now let's go on to the next one. Another one on GBP/JPY. This was a somewhat manipulation M. This kind of occurred near a higher high. So if you look right here, you can see that this was like a break and retest situation. Maybe some people were looking to long with this trend line. So this M was targeting liquidity, right? This is an M that was targeting liquidity back below this area. If you go ahead and draw this out here, you can see that we did push to the upside. M occurred, and then you can see right here, expansion, right? Oh, expansion. So it happens time and time again, man. It's like clockwork, especially once you put in the time on the charts. Putting in the time on the charts is the main thing. The M's and the M formations, they work. They're very powerful, but the only way they work is if you make them work. You know what I mean? So that's what we got going on right here, man. Very simple. I could go ahead and work my way down to the lower time frame for this one. So let's go ahead and go down to the 15-minute. So boom, very clean M. This one broke the previous level of structure. Then draw Fibonacci from here to here. Then once again, you're going to enter somewhere in that 786 through 618 zone. Let's just say we go ahead and we sell off right here, and we're going to put our stop loss right about here. And we're going to target these new Fibonacci numbers. Okay, and aside from these targets, you just want to look over here, and you want to draw these levels out. You see how we took off from here? Took off from here. From that point, you just want to go ahead and map out where potential liquidity is. And you will go ahead and let the trade do its thing. So boom. Let me go ahead and bring this out a little bit. Spiking up a little bit. And then we're pushing down to new lows. Keep in mind we have liquidity residing below this area. And we are beginning to take off on this pair. Currently running, I'll go ahead and measure it for y'all really quick. We're currently running about 100 plus pips in profit, give or take, on this trade setup. So you guys can see the point of that one. Some of these M's could be swing trades. Some of them could be day trades. Some of them could be scalps. It just depends on what time frame you're looking at. Contraction, expansion, informations, mastery candles, they all occur on every single time frame. So you can look at them on a 4-hour, the hourly, 5-minute, even a 1-minute. Even in 1 minute it happens. So this is another one on GBP JPY. We can see this looks very, very similar. Even if we come up to the 30-minute time frame, looks almost exactly the same. This trade setup. That just goes to show right here. Another concept: drawing Fibonacci down from this high up to this low, and then go ahead and draw this golden zone out. Short position will be right here. Stop loss will be right here. Take profit will be at the 618. And come on, man. There we go. Drop a sniper right on that. Super clean entry. And there we have it. So that's pretty much it for the informations, man. I'll be back testing them once we get further into the course so you guys can see how I trade them live. I'll catch y'all in the next video. We are going to get into W formations, which are going to be pretty similar, but it's just basically going to be vice versa.